So I'm just going to run through the 5 ways that you can make more money in your business and show you what small incremental changes can actually do to the bottom line. So I'm using an example here. These are all dummy numbers. Obviously, if we was doing this with a client, it'd be their actual numbers from their accounts. But yeah, just to run through, just so you know exactly what all of these are. Sales is your products and services that you're selling. Cost of sales is the direct cost of making those sales. So the physical materials you're buying in and reselling, or direct people, subcontractors and things like that. Then you've got your overhead expenses, which is all your admin costs. So things like rent, accounts fees, standard salaries, bank fees, marketing costs, computer costs, all of that sort of thing. And then any other income if you have it. You've then got your accounts receivable. So this is what's outstanding at the time you do it, of what is owed to you from your customers. So you've invoiced but they've not paid it yet. And then on the flip side, accounts payable is what you've received bills for but haven't yet paid. And then inventory or work in progress. And this won't apply to everybody, but basically it's your stock levels if you're a product-based business. And this would be valued at the cost of what you bought it for, not what you're going to be selling it for, but what you bought it for. And if you're a service-based business, you've probably got work that you're working on and haven't yet billed for. So that's your work in progress. And then we've just popped in over here the tax rate of currently your standard corporation tax rate. We just use a very basic valuation multiplier to value your business. And then we put in team members. FTE stands for full-time equivalent. So 6.5 here potentially means 6 full-time or 1 part-time who's working, say, half the hours a week. So that's all of that. So what we're going to do first is look at increasing sales. So at the moment, I'm going to reset this when I was playing with it. So at the moment, you've got 625 in sales. So let's say we increase this by 2%. That will give you 4,455 extra pennies in your bank. And it will give you an extra £5,500 of profit every year for just 12,500 change. This is all based on, again, using these figures. So, and your cash and profit will never match because obviously there's timing issues and things like that. So you can see there how a small change in your sales, which could be either you're selling more or you put your prices up, just by 2% is going to have that impact. At that level, obviously, 2% for everyone's going to be different. But even if you look at 10%, it's going to have a difference. So what could you increase your prices by? What could you do with your sales to increase the sales to get that impact? We've then got improve gross profit margin. So we've got some bits on here as well. So improving your current profit margin is 44% at £275,000. So again, if we increase that slightly, so let's say you we've already got the impact here from increasing the sales as well. So let's say you are also able to agree a better deal with one of your suppliers, so you get a little bit of a discount. So you get a 2% discount. Well, 3% because I can't quite get to. 3% discount. So you're increasing your gross profit margin. That's an additional impact on profit of £20,000 there for just that 3% increase by reducing your direct cost of sales. We've then got increasing profit by reducing overheads. So, okay, let's say you are speaking to an accountant to get help with this and they're costing you £500 to do the work. I'm not saying that's how much we are charging, by the way, I'm just an example. So you are actually going to be increasing your overheads a little bit So that will have an impact on your profit and your cash, obviously. But overall, you're still going to be up. But say also, so you're still going to be up overall because you've still got this total impact at the bottom of £47,000 extra profit, even with increasing your overheads by speaking to an accountant to have this sort of work done with you. Increased cash flow. Now this is a really good one because up here you've got £115,000 there, just not in your bank account basically. So I'm just going to close these to make it a bit easier. So how about some of that comes into your bank account? So you could potentially introduce direct debit payments or card payments, and therefore you can reduce your debtor days. Let's be simple, let's go for a week. So on average they're paying you a week earlier. That's going to free up nearly £12,000 cash in the bank for this dummy client. Current cycle of how long things are in stock for. Let's say you can get things done quicker, so you can get invoiced quicker. Let's just do that by a day. That's nearly £1,000. And you're currently paying your suppliers on 50 days. Now, ideally, you want to have good terms, and having better terms with your suppliers means that they will let you pay longer. Or if you pay them quicker, they may even give you discounts. So let's say you want to reduce that to the standard 30 days. So you are then a good person and you're paying them more. So yes, that does mean that you're going to be spending out an extra £19,000. But overall, you're still going to have this bigger impact on your cash flow and your profit. But again, you don't have to be that drastic. You may not need to. Some suppliers may be fine. So let's reduce that a little bit. And you can see the impact there. And then lastly, we've got your return on investment. Now this could be something simple like changing your productivity, so automating tasks, which means that your team then can be 5% more productive. That's a massive change. And it may sound not a lot, 5% productivity increase by just automating some things, but that's got a big impact on your bottom line. So I know I've whistled through that, but I hope this has whetted your appetite and you can see clearly how small changes in each of these areas can actually improve your cash balance and your profit.